Program is brought to you by realestate.com.au, Australia's #1 address in property. With more properties for sale than anywhere else, we make it easier.
Welcome back to the program. There will be 883 auctions in New South Wales this week. 739 of them will be in Sydney. Victoria will hold 1,151 auctions with just over 1,000 in Melbourne. Queensland will have 265 auctions, 128 of those in Brisbane. South Australia will have 118 auctions with 110 in Adelaide. WA will have 7 auctions, 3 of those in Perth. And in Canberra, there'll be 129 auctions. But let's take a look now at the most viewed auctions for the week. Starting in New South Wales at 32 Delmar Parade DY. It's a 3-bedder, 2-bathroom house with a big yard. It's on around 900 squares. It's got a price guide of $1.5 million. Over in Victoria, 6 Lodge Road in Camberwell is a pretty and elegant 3-bedder with a price guide of about $1.45 million. Then you've got 9 Yarra Street in Hawthorn. It's a grand 2-storey, 6-bedroom house on around 900 squares. It features high ceilings, fireplaces, sun-filled rooms, outdoor entertaining spaces and a wine cellar as well. In-ground pool. It's got a price guide of between $5 and $5.5 million. Over still in Victoria at 20 Greaves Street, St Kilda. It's one for the renovators. As you can see, it's a bit unlivable as is. It does need work, but sits on 200 square metres and has a price guide of $755,000 to $830,000. Also in Victoria, 27 Stanley Street in Ivanhoe. It's a charming 3-bedder in a quiet street on just over 500 squares and have a price guide of about $800,000 to $880,000. But the top listing of the week is 51 Corey Parade Seacliff in South Australia. It's a huge home with 19, yes, you heard, 19 bedrooms. It's a coastal home currently used as a house at the front and a self-managed rooming house at the back. Prior to this, it was actually a nursing home. So lots of opportunity to make it what you will. There's a large kitchen, fireplace, an entertaining area, soaring ceilings, and a wide frontage as well. The property could do with some work, but it's mostly cosmetic. But let's get more on the property market now. I spoke with Paul Ryan at REA Group, asked him about the strength in auction markets.
After kind of ending the year reasonably subdued, the auction markets opened really strongly in 2023. So we've got about 2,500 auctions nationally scheduled this weekend and already a similar number scheduled next weekend. And over February, we've seen auction clearance rates in Melbourne and Sydney in the 60% range, which is consistent with really strong conditions, similar to the market we saw this time last year before interest rates increased. Why
do you think that is? What do you put that down to?
So part of it is, I mean, the start of the year is a good time to look back at how housing markets performed over 2022 and since the pandemic in general. And even though we saw prices down, 7 and 6% in Sydney and Melbourne over 2022, prices are up in a lot of regional parts of the country over the past year. And even in Sydney and Melbourne, the biggest markets, prices are still up 23% in Sydney since the start of the pandemic and 13% in Melbourne over the same period. So there's lots of sellers and owners out there with a large amount of equity. And I think a lot of the uncertainty that came throughout 2022 with those interest rate increases at such a fast pace is now starting to dissipate. And I think the market's kind of getting back to more normal conditions into 2023.
Yeah, I guess that's a question because we know we've had a more hawkish RBA to kick off the year. We know now there's at least a couple more interest rate hikes priced in. Is this not impacting house prices further, or investors, house investors and house buyers out there just expecting now the rate hikes and they're pretty much just priced in?
Yeah, that's an interesting one. We saw the RBA change its tone in 2023, coming out a bit more hawkish, so expecting interest rates to increase a bit further than we did expect at the end of last year. So forecasters are expecting maybe another 75 basis points of moves in the cash rate, which will flow through into mortgages. And now, normally you'd say that's unambiguously negative for the housing market, but as we just talked about, the market started the year really positively. So I think buyers and sellers are kind of expecting these higher interest rates now. This is the new normal, and we're kind of basically the market is starting to reflect really strong economic conditions, the labour market, growth across the economy, and interest rates are now going to have to slow that down.
Do you think partly we're seeing clearance rates increase because finally we're seeing vendors and buyers on the same page? They're starting to sort of match in terms of expectation.
Yeah, I think that's a big part of why the auction market is now performing much better. I think late last year we had this situation where borrowing capacity was down, and we're seeing borrowing capacity down roughly 25 to 30% for buyers, so they can borrow substantially less than they could. Where sellers were still expecting prices at kind of 2021 levels, and now I think both buyers and sellers are more on the same page, which means that homes are selling faster, and we're more likely to get sales in auctions every weekend.
Do you think we're close to the bottom now in house prices? I mean, there's a lot of talk about capital cities and perhaps prices starting to bottom out. What's your take?
Yeah, that's always the most interesting question. So we've seen price falls start to moderate. So we aren't seeing the same quantum of price falls as we saw in the middle of last year when we saw, say, interest rates going up by 50 basis points each month. But that being said, there's still that big decrease in borrowing capacity we expect to continue to push prices down. So we're expecting prices to continue to fall lower throughout the year, but at only a moderate pace. We're not expecting big, sharp falls in prices. And part of the reason for that is housing demand is so strong. Well, you can see that in the rental market. I mean, we've got rental shortages pretty much all across the country at the moment.
Well, on that, do you expect the rental market to continue with its sort of tightness throughout the year?
Yeah, unfortunately, for any renters out there, it's going to be incredibly tough throughout 2023, we expect. There's a real shortage of homes. There's kind of half the number of available rentals as there were pre-pandemic, and now we're getting back to kind of demand conditions that we had before the pandemic. So we're going to see continued strong rent growth. I mean, rents have grown by more than 10% over the past year, and we're expecting similar conditions in 2023.
What contributes to that easing off, though? I mean, when can you see a turnaround in that? Because supply, we know increasing supply takes sometimes years. You know, you've got red tape to get through. That's obviously a longer-term solution to the problem. What are the short-term solutions to the problem?
Yeah, that's again, tough for policymakers. How do you make more rental properties available in a short period of time? Now, one of the things that occurred throughout the pandemic was that renters moved into smaller households, and that will start to reverse. So price increases will mean that renters will have to kind of shack up with other renters in more and more frequencies than they have been. That's part of the short-term solution. The other solution is kind of getting more investors into the market, and we've seen that in investor finance numbers. We've seen investors increasingly come back to the market and at lesser rates sell properties, which was a big facet throughout the pandemic. We saw lots of investors selling investment properties. Now, some of those went to first home buyers, which reduced rental demand. So in the long run, you're exactly right. The solution is building more homes and making that easy. Unfortunately, that's going to take some time to filter through into the rental market.
Paul Ryan, appreciate your time. Thanks so much for joining us on the show.
Thank you very much.